DTN's Darin Newsom is our corn and soybean market analyst this week. Ahead of the agency's monthly crop report, the USDA's latest ratings show U.S. corn maintained the percentage of the crop in good to excellent categories. 76% is listed in the best two groups. That's 6 points above the rating this time in 2015. In soybeans, the crop improved from a week ago. 72% is now good to excellent, a point better than the previous week and 9 points ahead of this point last year. We talked with Darin Wednesday afternoon at DTN's offices in Omaha and began by asking for his thoughts about current crop conditions across the country.
You know, it's a mixed bag. I know what NASA's weekly reports are saying every week, and you know, the latest ones we saw were that corn ratings were actually above 2014 and, you know, almost the equivalent of what we saw back in 2004. So we're starting to talk about some very large numbers. And the problem is those numbers usually aren't accurate, and they aren't a very good sign as to what yield might actually turn out to be later on. But right now, crop conditions themselves, the crop condition ratings themselves are pretty high, pointing to the fact that, again, at least in corn, it looks like, you know, yield is maybe better than what's being projected at this point.
Do you think there will be adjustments in the August crop report next Friday?
Yeah, it's a great question because this isn't where USDA is actually going to look at NASA's numbers and use them as any sort of base for the decision they make. This is supposedly the first survey-based set of numbers that they're going to release. And so that being the case, as of the end of July, I think it's possible that we could see USDA increase its yield numbers a little bit. And if they increase their yield, obviously production is going to go up as well. Will it be as high as some of the talk right now? You know, it seems like everybody's falling in line, falling in love with that 175 bushel per acre number. I think that's a little too high. I don't think USDA is going up there yet. And I don't think we're really going to know. In fact, I know we're not really going to know until the combines actually start rolling.
Maybe that's the question. Do you sense the trade is leaning significantly higher?
Well, you know, we've pushed corn down. We've seen December corn go to a new low of 329 this week. The major low on its monthly charts down, you know, for the market itself is down at 318 and a quarter. So we're within striking distance of that. So it would seem to be saying that, you know, there's at least a segment of the market that believes we're going to see much larger numbers when all said and done. I don't know yet. I think we're going to have to see how the fund money, how the investment money starts to play out. If we start to see some commercial buying coming back into this market, that would tell us that, you know, in the end, maybe those huge yields just aren't there, and that there was actually some weather damage done in July.
Obviously two different questions, but are we out of the woods for weather concerns in corn and soybeans?
As far as corn goes, it certainly seems like it. You know, it's going to be what it's going to be now. We saw a little bit of everything in July where we saw some very hot temperatures, but we continued to see some intermittent rain mixed in. So, you know, the idea is, again, crop conditions are going to come in good as long as the crop stays green. When it starts to turn brown because it's maturing, the crop condition numbers are going to come down. But as far as the weather goes, it looks like corn is, you know, made for better or for worse, and it's not going to change all that much. It just has to finish maturing now. Soybeans, I think, are still up for grabs at least a little bit. Here at early August, we've seen some pretty good conditions for the soybeans, and by what forecasts are saying right now, it looks like that's going to continue, you know, for much of this month.
Has the slide in corn and soybean markets been driven solely by weather?
It's been due in large part to weather, yes. But it's not fundamentally driven. That's the thing. This isn't a supply and demand issue at this point. This is an investment issue. The investment traders are bailing out of this market. They are selling their long positions. They're whittling them back. You know, in this Friday's CFTC commitment to traders report, it's very possible that we see the corn go near par. In fact, you know, maybe they have almost an even amount of contracts bought and sold. So I think it's been more of an investment play than something based strictly on fundamentals, because the future spreads haven't changed all that much. And particularly in soybeans, where the long-term outlook still looks to be bullish as global demand continues to outpace global supplies.
Globally, what do you expect for South American production in their next growing season coming up?
I think it's going to be a tough decision because, you know, price-wise, at least earlier this summer, soybeans were just pulling away from corn. And they were saying, you know, we need to plant more soybeans, but Brazil's almost out of corn. So they're going to have to find some more corn acres or find some way of rebuilding their stocks. So I think it's a bit of a toss-up in Brazil. From what I'm hearing right now, most likely we're going to see a few more soybean acres. It wouldn't surprise me to see them up their production in soybeans because that's where global demand is the strongest. Global corn demand seems to be waning a little bit. I think it's going to pull in more acres for soybeans.
Stepping aside from corn and beans and talking about crude oil, can you explain where the slide has come from there and where you think the prices might go?
Well, it's like everything else. We got too much of it. We've got grain supplies too large, crude oil supplies are too large, and investors had bet on the idea that supplies were going to start to come down, demand was going to pick up. Didn't happen. So now we've got future spreads at incredibly wide levels. We've got investment money again just pouring out of the crude oil market, but it's coming down to some support. Everybody was getting all excited when it moved back below 40. It wasn't that big a deal. You could see it coming from months away. But now we're getting down to that $38, $39 range, and it looks like that's where it's probably going to want to hold. Is there any seasonal reason for it to move higher after this? No, not really. But we could start to see some money come back in. A lot of it's going to have to do with what happens in the dollar. Some of those answers are going to start to form here this Friday when the July jobs data is released. That's going to give us an idea of when the Federal Reserve might actually move on interest rates next.
That crop report could be a wild card, but to close out with your thoughts on where corn and soybeans might go here over the next week or two.
Anywhere between $0 and maybe $5 in corn. Soybeans, similar. There's no way of telling. Again, we are so close to the lows. Soybeans are actually testing support down around 930. Again, corn is near its long-term low of 318. If these areas don't hold, and if production is expected to increase, say, above 15 billion bushels in corn and well above what's being projected right now in soybeans, there's a lot of downside yet in these markets, just from an oversupply situation. The structure of the markets don't look like that's going to happen, so we could be building a base of support in here. Certainly could change with this next report because that's when investment traders get the most active.